The value aligned portfolio returned about 10.0% net in April 2026, the week that closed. Here's what mattered, what to ignore, and what to carry into next week. If we haven't met, I'm Burke's AI avatar. I deliver financial content for free, so you don't have to pay. David Berkowitz, the main guy at VAP Wealth Advisors, trained me with 40 years of his personal experience as a hedge fund trader, stock analyst, portfolio manager, and corporate finance consultant. You get all that knowledge while he's meeting with clients and researching quality companies. He reads every comment and writes every lesson. I'll walk you through the index recap, the sector picture, the five biggest winners and losers in the S&P, the Fed and macro update, the Iran war transmission, and how every single one of our top and bottom names performed. Stay with me to the end for the three things to carry into next week. Weekly market and value aligned portfolio review for the week ending May 1st, 2026. The portfolio returned about 10% net in April. Let's get to the numbers. The major US indexes all finished higher. The Nasdaq 100 ETF, QQQ, gained 1.6% on strength in big tech earnings. The S&P 500 ETF, SPY, added 0.9%. Small caps, the Russell 2000 ETF, IWM, rose 1.0%. The S&P 500 equal weight ETF, RSP, gained only 0.4%. The S&P 500 closed at 7,230. Nasdaq closed at 25,114. Both indexes posted a sixth straight weekly gain, the longest streak since October 2024. The wide gap between QQQ and RSP shows the rally is being driven by a handful of mega cap names again. 11 sectors, 9 up, 2 down. Energy led at plus 3.5%. Brent crude touched a wartime high of 126 during the week before settling at 114. Defensive sectors held up well. Consumer staples plus 1.1%, real estate plus 1.1, utilities 0.8%. Technology added 1%, communications 1%, financials plus 1%. The laggards, consumer discretionary minus 0.1%, almost flat. Materials worst at minus 1.1. Read the picture as money rotating into oil-linked names and defensives as the AI cap expenditure bills came to light in the big tech conference calls. NXP Semiconductors, ticker NXPI, plus 21%. The company that designs analog and embedded processing chips for cars and industrial systems. Q1 revenue hit 3.18 billion, up 12% year over year, with auto and industrial both accelerating. The auto cycle bottom is in. Seagate Technology, STX, plus 17% on a record AI storage quarter. Revenue up 44%, gross margins at all-time highs. Qualcomm, QCOM, plus 16%, China handset weakness called a bottom, plus a hyperscaler data center chip win. Caterpillar, CAT, plus 10% on a $63 billion backlog, up 79% year over year, and a power and energy segment now being valued as AI infrastructure. Visa, V, plus 10% on 17% revenue growth and a fresh $20 billion buyback authorization. Spirit Airlines, SAVE, down 62%. The carrier ceased operations on May 2nd after jet fuel prices hit $4.51 a gallon. The restructuring plan assumed $2.24. Iran war oil prices killed the airline. Roblox, RBLX, down 21%. Daily active users came in at 132 million versus 143.8 expected, and management cut full-year bookings guidance by nearly $900 million. The cause was an age verification rollout that added onboarding friction. Robinhood, HOOD, down 10% on a headline revenue miss despite record platform assets of $307 billion. Domino's, DPZ, down 10% on a sales miss and lowered guidance. Meta Platforms, aka Facebook, META, down 9%, earnings beat, but CapEx guidance was raised to $125 to $145 billion. Investors blinked at the bill. The Federal Reserve held the funds rate at 3.5 to 3.75% on April 29th. The vote split 8 to 4, the most dissent on the FOMC since October 1992. Governor Stephen Moran wanted a quarter-point cut. Three regional presidents, Hammock, Kashkari, Logan, voted to hold but rejected adding any easing language. Q1 GDP came in at plus 2.0% annualized, below the 2.2 consensus. but a sharp rebound from 0.5 in Q4. Headline PCE inflation hit 3.5% year over year, the highest in nearly 3 years. Core PCE at 3.2. Energy prices linked to the Iran war drove most of the inflation print. Slowing real growth plus accelerating headline inflation is the textbook definition of stagflation. The Fed is being held in place by oil prices it cannot control. The Iran war, now in month 3 since February 28th, is the single biggest macro variable in this market. Brent crude is up 60% since the conflict started. The Strait of Hormuz, which normally handles a third of seaborne crude, is effectively closed. The World Bank called it the largest oil supply shock on record. 3 transmission channels matter for U.S. investors. 1. Headline inflation gets pushed higher, which keeps the Fed reactive, never preemptive. 2. Businesses with Middle East exposure get hit directly. LVMH disclosed double-digit Middle East sales declines and called it a 1 percentage point drag on group organic growth. 3. U.S. energy producers, especially Permian operators like our Diamondback, FANG, and Permian Resources, print extraordinary free cash flow at every barrel above $70. The XLE Energy ETF is up 32.5% year to date, by far the leading sector in the market. Our 5 best names this week: NXP Semiconductors plus 21%, Q1 revenue up 12%, automotive up 10%, excluding the MEMS sale, industrial and IoT up 24%. Auto down cycle is over. Alphabet, Google plus 12%. Cloud revenue grew 63% to $20 billion, with backlog nearly doubling to over $460 billion. CEO Sundar Pichai said on the call, quote, "We are compute constrained in the near term. That is the cleanest demand signal in tech." Eli Lilly, LLY, plus 9%. Mounjaro grew 125% worldwide, Zepbound grew 80%, and the new oral GLP-1 Fundeo launched April 9th with 20,000 patients treated. Permian Resources, PR, plus 7.8%. Delaware Basin Shale generating free cash flow at Brent above 100. Diamondback Energy, FANG, plus 6.6%. Midland Basin operator with Endeavor cost savings flowing through. Energy is doing what energy is supposed to do during a Middle East war. Our 5 worst names this week, and the headline matters. Every one of them is a sentiment story, not an earnings story. Kinsale Capital, KNSL, down 9.7%. Operating EPS grew 37.7%. Combined ratio of 77.4. The market punished gross written premium that ticked down 0.5% because of underwriting discipline. Buy that value-aligned behavior every time. Markel Group, MKL, down 7%. Insurance combined ratio improved to 93 from 96. The headline EPS miss was a quarterly mark-to-market on the equity portfolio. Huge intrinsic value growth as operating income from underwriting soared. LVMH, LVMUI down 5.4%. Asia ex-Japan grew 7% on China recovery. The U.S. grew 3%. The Middle East war is the cycle. Ulta Beauty, Ulta, down 4.8% on category normalization. Next earnings, June 2nd. Nvidia, NVDA, down 4.7%, and still up 84% over 12 months. None of these is a thesis break. 3 things hit Nvidia this week. 1, Amazon told investors that Trainium and Inferentia, its in-house AI chips, are now at material scale. Google announced it will sell its custom tensor processing units to outside customers. 2, a Wall Street Journal report said OpenAI is missing internal targets for both new users and revenue, raising the question whether AI infrastructure spending is overshooting near-term monetization. 3, a China crackdown on chip smuggling has nearly doubled prices for the B300 server to $1 million each. Bullish for unit margin, bearish for unit volume. The next checkpoint is May 20th earnings. The CapEx math at Alphabet, Microsoft, Meta, and Amazon still points to 2 more years of strong demand. Next week's calendar. Monday, May 4th, Diamondback Energy reports after the close. Tuesday, May 5th, Institute for Supply Management Services, aka ISM Services. Wednesday, May 6th, Permian Resources reports. Friday, May 8th, April non-farm payrolls. Prior reading was 178,000 jobs added with unemployment at 4.3%. Bullish path for the market, payrolls between 130 and 150,000, Brent crude back below $100 a barrel, and a July rate cut starts getting priced in. Bearish path, sub 100,000 payrolls, Brent above 115, and the market faces the worst combination, Slowing labor data with no Fed help because headline inflation keeps the hawks dug in. Here's the chain that ran the week. Iran war pushes oil to 114. Oil pushes headline PCE to 3.5%. Inflation forces the Fed to split 8 to 4 and stay on hold. GDP slows to 2%. Mega cap earnings outrun the macro and carry the indexes to fresh records. Energy leads everything. Insurance and luxury lag on cyclical sentiment. 6 links. Every one of them moved the portfolio. 3 things for owners of the businesses we hold. 1. The earnings power of the portfolio is intact. The 5 names that fell, Kinsale, Markel, LVMH, Ulta, Nvidia, are giving back sentiment, not cash flow. That distinction is the entire job of a long-term owner. 2. The energy weighting is doing exactly what it is supposed to do during a Middle East war. With Brent at 114, the temptation to take profits on PR and FANG is real. Discipline says hold. 3. Megacap AI CapEx is now a permanent feature of the equity market. Alphabet at 190 billion, Meta at 125 to 145 billion, Nvidia earning the margin on most of it. The math works over a 3 to 5 year horizon. Owners who flinch every quarter on the CapEx headline will not capture the return. May 8th payrolls and May 20th Nvidia earnings are the next 2 market-moving prints. Stay where you are. That's the week. April closed 10%. The portfolio's leaders carried a heavy macro and earnings load, while the lagging names absorbed sentiment hits with no thesis change. If this kind of analysis is useful to you, the weekly review goes out every Saturday. Subscribe so you don't miss the next one. And the video right here breaks down the Markel Q1 print in full, which is where most of the bottom 5 sentiment drama is sitting. See you next week.